whenever markets start to swing widely after a long move down or up, it's usually a signal that that move is coming to an end. And the volatility is between the late Johnny-come-latelys to whatever the move was, and the early people who are speculating that the turn is coming. And that's why we have this swing. That is all part of because of really the uncertainty in the economy right now. We just saw an employment number that everybody says, it's good. No, you need 250,000 to really have employment growth because of the people that leave the workforce, retire, pass away, etc. And that was a substandard employment number, and it plays into a bunch of the economic numbers that are clearly suggesting a much softer economy, if not a recessionary climate. And we have the Atlanta Fed, which tends to be a volatile index, go from almost up 4% 6 weeks ago, now looking for a contraction that may be closer to 4%. So the volatility in the stock market, it's unsettling for business. If you can imagine any business planners out there, between the tariff news and now the employment news, we've seen the much higher increase in layoffs. So this is, if you're a bull, you can use the word unsettling. If you're a bear like me, it's starting to confirm the turn down that I've been looking for after the Trump pump, which I felt would last a few weeks into after his inauguration. I always like to say, those of us who look in a crystal ball, the only thing we become experts in is how to eat a lot of broken glass. So I given up forecasting moves decades ago. I'll make an educated guess. The market has been priced for perfection. In other words, it's traded at one of the highest valuations ever. It had a group of stocks that were basically the backbone to it, the Magnificent Seven or whatever you call. They've rolled over. A lot of the indicators that markets are peaking are out there. They're telling us that. And, you can't expect to turn on a general financial news network and hear them to say that, because quite honestly, and I'll say it before and I'll say it again, most of those talking heads could be tossed off the Empire State Building and all the way down. They'd all say the same thing. Hey, so far, so good. So I don't expect them to ever give me an objective analysis. But the stock market, if it is still a place where you buy and sell part ownerships of businesses, and businesses still rely more on the economy than anything else, then I think that market, for me at least, is a sideways at best, maybe ink out small gains, but there's more danger of sharper declines than more sharper rises. I think I hear somebody from the mainstream media saying something about gold. After all, it's outperformed their most talked about investment stocks and bonds for 25 years. Copper goes up 5% in a day. Pin drop. That's all good, even though you're frustrated because you like to turn on the mainstream media and hear somebody confirming. But we know, we've seen the performance. Look at the tremendous move in gold in just 2 years. Now, I've been in the camp, and people that want everything to go straight up don't understand that markets are always best when they go 2 steps up and 1 step back. And we had a huge move from just under 2,000 to just below 3,000 without a serious correction or consolidation during that period. And so if you want prices much higher than 3,000, we need a base just under it to give us that foundation that would hold, so we don't go quickly above it like a bottle rocket, explode, and then just fall back to earth. So I'm very, very bullish on the gold market. The silver market is starting to peak up. It's still in the back seat next to gold, but I suspect when it takes out the key number, which will bring all the momentum players in that 35, 36 area will go. And of course, the copper market is trading, just couldn't ask for better. So despite not hearing it outside the limited industry that we work in, it's still very, very bullish scenarios for the metals, and not even a beginning or a hint of anything serious in terms of downside risk. Well, first, there have been some that have, and those are the major gold producers who are legally printing money. Their free cash flow is at records and is going to be outstanding even more in these coming quarters because the gold price is constant or going higher. And one of their biggest costs, oil, to operate their mines is going down in price. In a year where even top Wall Street analysts are not looking for much growth in earnings for the S&P and what have you, the one sector which is just outperforming them all with free cash flow right now are the major gold producers. And sooner or later, the generalists who never really look at that industry and look at all these other sectors, you're starting to see some of them talk about it. I was shocked to turn on one of the financial networks and hearing one of the talking heads talk about Agno Eagle. But you have to, given the fact that they're printing money in their free cash flow. And so that's leading to an increased mergers and acquisitions. And now you're going to then see these majors use their stock, which is going to be nicely increasing, stepping down into the junior market to get their future, hopefully, resources. That's starting to happen now. We just had a major merger in Canada of the two companies that'll be Canada's second biggest gold producer. We're going to see a lot more M&A. So that's a sector that I don't worry about. I've actually increased my holdings in it in recent days and have a very, very large stake. Not a stake that the average person should take equally in terms of percentage with dollars and cash, but I'm convinced that it will not trickle down to the junior market, but make that junior market explode. And we're already seeing that. We're seeing things like the GXXJ and all nicely up already for the year, but because it was so bad for so long and still a lot of them are still not performing well, there's still a feeling of loss among the individual shareholders, but that's turning for the right reasons. Trump's comment about Iran today was the most aggressive I've heard in years by a president of the United States. He's basically said that we're running out of time and the fuse is short. Now, we know just a couple of days ago, he made a statement about Gaza that if they don't release the hostages and do it all quick and all, they're dead, deaths. I mean, this is the president of the United States saying this. And then, of course, today he's basically implied that they cannot have a nuclear weapon and the time has come really, really short. Now, when you tie that into some of the things Israel has said, when we tie it into Iran in recent days, have noted how they've been refortifying their nuclear facilities, and then even put out a statement a couple of weeks ago that even if they do get bombed, they'll have the ability to build new ones elsewhere. It suggests to me that the Middle East may be getting set for one of its biggest confrontations, more so than we've even seen in recent years. So you have the Ukraine, you have the Middle East. Taiwan is still having those issues with China. China basically say, if you want war, you want a trade war, you want a regular war, we're ready for it and we're ready to fight to the end. I'd say the geopolitical picture is not a pretty one. And there's multiple areas where things go wrong. That's beneficial to gold. Make no mistake about it. The central banks continue to buy gold. We saw the repatriation, and now we're seeing this movement of gold. There was a great story out today, and I put it out, and a guy made a lot of sense. Circumstantial evidence, but it made a lot of sense that a key reason for this gold to come back is that this new administration basically discovered that Fort Knox doesn't have all the gold that a lot of people said it had. Because it made no sense to me why a couple of weeks ago, why would you bring up as the president, yeah, we're going to go there and open the door and see what's there. It doesn't do the United States really, really well. Very interesting times, but the continuing unstoppable purchasing of gold by central banks is the single biggest supporting factor. They're not buying Bitcoin. They're not forming a quasi, and it's a BS calling a strategic reserve when you're just taking something out of the lost and found and putting a sign on it now. But the bottom line is the gold market has so many strong bullish underlying fundamentals that suggests, as long as I think we make a technical base that's strong enough to hold, that we'll eventually get above 3,000 this year, and who knows then what the number could be after that. If you think about an asset sheet, so now let's just say it's worth $5, but because you revalue it, it's worth $300. More people, banks would all be more willing to deal with you because you have more of an asset base than you had. The one thing that he's never been in his entire history is an austerity person. He's a great believer in debt and the leverage of debt. We've seen that in businesses, and sometimes it caught him into some serious problems. So I don't believe there's a motive or a hidden agenda to somehow do all this so we can reduce the debt. I do think they want to make an honest effort because they recognize as business people, you can't keep running $2, $3, $4 trillion deficits, because even if that stops now, still having $36 trillion in debt, we're never paying that off. You know, it's ridiculous. He did make that comment once or twice that we're going to pay off the debt. How could a country where 2/3 of its workforce is working paycheck to paycheck and a government only exists on the taxing power that it has from its citizens, how could we ever expect our working working force to come up with enough money separate from everything that it needs to live to pay back $36 trillion that we owe. And that's one of the things, concerns about long-term for the bond market that I think people should just put in the back of their mind now. Yes, interest rates have come off a little, they've come lower, and that's decent. But there's going to come a time, whether the economy is strong or weak, that bond yields can go greatly higher if people become more and more concerned of our ability to pay the interest. I don't think people even worry about the principal anymore. I don't think they ever expect that. They just hope we can keep paying the interest so the debt that they do have outstanding can be refinanced and they can be repaid. That's probably a 2026, 2027 issue, but we are getting to that point where people around the world are starting to ask, can we make these interest payments, especially if we don't get a hold of these deficits and they keep just going up. I mean, if you think about it, we're going up $1 trillion basically every 30, 60 to 90 days. That's totally unsustainable. Well, the Congressional Budget Office in 2024, and they raised their opinion twice, now is at $54 trillion expectation by the year 2031 or 2032. Without a major recession, they expect that's what the long-term debt will be. I say just make it $50 trillion so it's easy to deal with and put a 5% interest on it, which is not high. $2.5 trillion in interest expense. The best this government ever took in was 2 years ago, just under $5 trillion in income. So let's just say they do the $5 trillion. We're going to see half of everything we make go to pay interest. We will not be able to operate our country in anything close to what we've been used to. And that's the big scary point, because it's no longer way off there. It's in most of our lives, certainly yours. And even though I'm an older man, it could still be in mine too. You know, I have three huge concerns. No matter who the president, who's in power in Congress, I don't think they're going to overcome these three things. I think they're acute crises. One we just talked about is the debt. The two is a retirement and aging crisis. And the third is an infrastructure and natural disaster crisis. All of them are extremely expensive at a point in time where a government doesn't have money. What I don't hear in any of the discussions is the $70 trillion of expectations of Social Security, Medicare, and Medicaid payments that have to be made in the next 10 to 15 years. And we don't have any money sitting anywhere that we take that and pay that with. So there's a lot more ahead of us. And while it is a good feeling and it's horrible to see how corrupt the system is, and that on both sides of the aisle, there are all sorts of people making all sorts of money. We have a long, long recovery, and I don't think in my generation we'll ever get close to seeing it. And hopefully before you're my age, and I'm long gone, you've seen some real recovery, because if not, then we're going to be the country that we used to sit around and joke about in the 70s and 80s in the brokerage business, and that is a banana republic.